We're back with you here on the Market Day Report. I'm Marlon Bowling, your tour guide to the ag commodities. What do you say we take a little trip right to the trading floor in Chicago and go find out what's going on direct from the source? Well, at the edge of the trading floor at the CME Group, we have none other than Scott Gecas standing by. He's with Longleaf Trading, a regular contributor here on RFD TV and Rural Radio. How you doing, Scott?
Good. How are you?
Doing fine, thank you. So at midweek, what's the talk on the floor?
Yeah, it's a pretty quiet day today. After the big market move yesterday, it's pretty much settling down. With the soybeans, what we're focusing on is just pretty much the exports. The September exports are down about 40%. Just across the board, corn exports are off about, September exports are down by 83%. Even in the wheat, they're off about 36%. So that's going to be what our main focus is on. The weather going forward is a little bit bearish just due to the dry weather. Should it help the harvest going forward? But we're going to look at that. One thing I want to note about with the soybean market, we have expiration on Friday. There's large open interest in the 860 puts all the way down to the $8 puts. So we're going to see how that really is going to play out. We are focusing on that 850 level. If we can get a close below that, and we expect it to test 830, 820.
When you look at a soybean chart, it is pretty jagged there over the past several weeks. Do you think that this harvest pressure, maybe if we do have open weather for, let's say, a week or so in much of the Midwest, and farmers can really get caught up on the harvest activity, what do you consider to be the threshold to where the harvest pressure will be kind of behind us? It used to be the old standard was about 70%. What do you think?
Yeah, I think you're going to keep that 70% of benchmark. We expect it to be a little bit higher. With the world ending stocks being at record levels, the increase of harvest production is going to be a little bit of a bearish factor, but we're just going to wait and see where that comes in and play in the next few days here.
Outside markets, are they talking about them a lot on the floor?
Yeah, everyone's been talking about the outside markets, especially with the big drop yesterday and then the recovery. And this morning, overnight, we were up about 150 points or so with the Dow, and you can see where we're at right now. So, yeah, the volatility is definitely back. You're seeing a lot of money managers protect themselves with options. Option volatility is a little bit elevated just across the board, just with the recent moves.
Yeah, the Dow has been all over the place today. It has been as much as, 80 points higher. Now it's like 100 points lower again, so very choppy there. The dollar value, I wanted to take a quick peek at that. For the dollar index, it has been really surging, and we have December U.S. dollar index futures 530 points higher right now at 96.250. So something to keep an eye on. And by the way, the crude oil market on the West Texas Intermediate crude is 27 cents higher today at 66.70. So sometimes that can offer a little bit of spillover support to the corn market, which, by the way, we got new ethanol numbers out a little bit ago too. Corn is down though. December corn down 1 3/4 at 368.5. Obviously, the focus is the harvest pressure today. The soybean trade, we have a little weakness there too. We're down 3 1/4 on November at 854 1/4 per bushel. If you look at the wheat trade in Chicago, we have the December down 4 1/4 at 504 3/4. Kansas City wheat has been lowered. December down 3 3/4 at 503 3/4. Minneapolis spring wheat trade barely lower. It's down 3/4 at 584 1/4 on December. And on the cotton market today, after a big up day Monday, a big down day yesterday, we have cotton kind of flat, down about 8 points at 78.91 cents per pound on December futures. We'll come back in a moment and talk with Scott Gecas about livestock right after this.